In the world of investing, generating income is like having your money work for you. It's about making your money an active participant in your financial journey. Instead of just sitting in a savings account, your investments can actively earn you money. This means your money isn't just idle, it's constantly working to grow. This income can supplement your regular earnings, help you reach your financial goals faster, or even provide a source of passive income during retirement. Imagine the peace of mind knowing you have multiple streams of income. Dividend ETFs offer investors a powerful way to unlock this income potential and build long-term wealth. They provide regular payouts, which can be reinvested to compound your returns. Many people rely on their day jobs for income. This can be stressful and limiting. But what if your money could earn its own income? This would mean less reliance on a single source of income and more financial freedom. That's the beauty of investing for income. It's about creating a financial ecosystem where your money is constantly generating more money. It's about putting your money to work so you don't always have to be. This can lead to a more balanced and enjoyable life. Whether you're saving for a down payment, your child's education, or a comfortable retirement, income-generating investments can help you get there faster. They provide a strategic way to meet your financial milestones. The power of compounding, where your earnings generate even more earnings, can supercharge your savings over time. This exponential growth can significantly enhance your financial future. Dividend ETFs might sound complicated, but they're actually quite simple to understand. They are a great way for investors to earn a steady income while also benefiting from the potential growth of the stock market. ETF stands for Exchange Traded Fund, which is like a basket of stocks that you can buy and sell on the stock market. These funds are designed to track the performance of a specific index, sector, or commodity. Dividend ETFs specifically focus on holding stocks of companies that pay dividends. These companies are often well-established and financially stable, making them attractive to investors seeking regular income. Imagine a basket filled with apples. Each apple represents a different company's stock, and together they form a diversified collection. Each apple represents a different company's stock. This means that by owning a dividend ETF, you own a small piece of each company in the basket. Now imagine that some of these apples periodically drop off a little bit of juice. That's the dividend payment. These payments can provide a steady stream of income for investors. A dividend ETF owns a collection of these apple trees, companies, that tend to share their juice, dividends, with investors. This makes it easier for investors to receive regular income without having to manage individual stocks. When you invest in a dividend ETF, you're essentially buying a small piece of all the companies in that basket. This allows you to benefit from the collective performance of these companies. This means you're instantly diversified across multiple stocks, reducing your risk compared to owning just one or two individual stocks. Diversification is a key strategy in managing investment risk. Plus, you get to enjoy the collective dividend income generated by all those companies. This can be a reliable source of income, especially during times of market volatility. Here's how dividend ETFs put money in your pocket. When companies within the ETF make a profit, they often choose to share a portion of that profit with their shareholders in the form of dividends. These dividends are typically paid out on a quarterly basis, although some companies pay dividends monthly or annually. When you own a dividend ETF, you're entitled to receive a portion of these dividend payments proportionate to the number of shares you own. Your brokerage account will automatically receive these dividend payments, depositing them directly into your account. You can choose to reinvest these dividends, buying more shares of the ETF and further compounding your returns. Or, you can withdraw the dividends as income to supplement your expenses, enjoy life's pleasures, or reinvest elsewhere. Dividend ETFs offer a compelling combination of benefits for investors seeking income and long-term growth. Diversification, one of the cornerstones of sound investing, is built into the structure of ETFs. By owning a dividend ETF, you're instantly invested in a basket of stocks, reducing the risk associated with owning individual companies. Stable income is another attractive feature of dividend ETFs. While stock prices can fluctuate, companies that pay dividends tend to be more established and profitable, often generating consistent cash flow that supports their dividend payments. This can provide a sense of stability and predictability to your investment income. Furthermore, dividends have historically played a significant role in total stock market returns. Over the long term, reinvesting dividends has been shown to significantly amplify investment growth. turning modest investments into substantial wealth over time. Section 5. Navigating the waters. Understanding the risks of dividend ETFs. While dividend ETFs offer numerous advantages, it's essential to be aware of the risks involved in any investment. These risks can significantly impact your returns and overall financial health if not properly managed. Market volatility is an inherent risk in the stock market, and dividend ETFs are not immune to these fluctuations. Sudden market downturns can lead to substantial losses, affecting the value of your investments. The value of your ETF shares can go up or down based on market sentiment, economic conditions, and company-specific news. Factors such as earnings reports, changes in management, or industry developments can all play a role. Interest rate changes can also impact dividend ETFs. When central banks adjust interest rates, it can influence investor behavior and market dynamics. When interest rates rise, investors may be drawn to the higher yields offered by bonds and other fixed-income investments, potentially causing a shift away from dividend-paying stocks. This shift can reduce demand for dividend ETFs. This can lead to a decrease in the value of dividend ETFs. It's important to monitor interest rate trends and understand how they might affect your investments. It's crucial to remember that past performance is not indicative of future results. Just because an ETF has performed well in the past doesn't mean it will continue to do so. While historical data can provide insights, there's no guarantee that a dividend ETF that has performed well in the past will continue to do so in the future. Market conditions and economic factors are always changing. Thorough research and understanding your risk tolerance are essential before investing. Make sure to consult with financial advisors and stay informed about market trends to make well-informed decisions. Section 6. Choosing your path. Practical tips for dividend ETF investing. Embarking on your dividend ETF journey starts with identifying your investment goals, risk tolerance, and time horizon. Are you seeking current income to supplement your expenses? Or are you primarily focused on long-term growth? Understanding your investment objectives will guide your ETF selection. Next, research different dividend ETFs, paying close attention to their underlying holdings, expense ratios, dividend yield, and historical performance. Consider diversifying across different sectors and geographies to mitigate risk. Start small and gradually increase your investment over time. Dollar cost averaging, investing a fixed amount at regular intervals, can help you ride out market volatility and potentially lower your average cost per share. Section 7. Spotlight on success examples of popular dividend ETFs. The world of dividend ETFs offers a diverse array of options to align with different investment strategies. The Schwab U.S. Dividend Equity ETF, SCHD for instance, tracks the performance of high dividend-yielding U.S. stocks with a history of consistent dividend payments. Known for its low expense ratio, SCHD provides broad market exposure and a focus on dividend quality. For investors seeking international exposure, the Vanguard International High Dividend Yield ETF, VOMI, offers a compelling option. VOMI tracks a diversified portfolio of high dividend-paying companies outside the United States, providing access to global income streams and potential growth opportunities. These are just a few examples of the many dividend ETFs available to investors. It's crucial to conduct thorough research and consider your individual investment goals and risk tolerance before making any investment decisions. Section 8. Maximizing your returns. Dividend growth for long-term wealth. While high dividend yields can be enticing, focusing solely on yield can be misleading. Companies that prioritize dividend growth, consistently increasing their dividend payouts over time, often represent a more compelling investment opportunity. These companies tend to be financially healthy, with strong earnings growth potential, making them attractive long-term holdings. Investing in dividend growth ETFs, such as the ProShares S&P 500 Dividend Aristocrats ETF NOBL, allows you to tap into the power of compounding returns. As companies within the ETF increase their dividends, your potential for income generation and capital appreciation grows exponentially over time. Remember, the key to maximizing your returns with dividend ETFs lies in reinvesting your dividends, especially during the early years of your investment journey. This allows you to acquire more shares, compounding your returns and accelerating your path to financial freedom. Section 9. Embracing the income journey. Dividend ETFs as part of your financial plan. In conclusion, dividend ETFs offer a compelling avenue for investors seeking to generate income, build wealth, and achieve their financial goals. By providing instant diversification, stable income potential, and long-term growth opportunities, dividend ETFs can serve as valuable tools in your investment arsenal. Remember to approach investing with a long-term perspective, conduct thorough research, and align your ETF selections with your individual investment objectives and risk tolerance. By embracing the principles of diversification, dividend growth, and disciplined investing, you can harness the power of dividend ETFs to create a more secure and prosperous financial future.